Hey, what's going on? Strat Soldier here for the podcast In Force, the only podcast with me, the Strat Soldier, looking at the market through the eyes of the Strat. Thank you so much for being here. Thank you very much. Today is February 16th. Today was a doozy. All right. Today was a doozy. We had jobless claims come out. And I remember back in 2019, we did not give a crap about these jobless claims. We didn't care about CPI. We didn't care about any of this stuff. It seemed every day can't be special, okay? Listen here, market. Every day can't be special, all right? But we're having people like cut whole positions, good positions too, just because CPI and news and inflation and things like that. And not to say that they're wrong, just because this news is definitely affecting the market big time. I'm just saying I'll be glad when we don't care about this stuff anymore because we can go back to trading. So we had CPI numbers come out. Jobless claims. And CPI was early this week. Yep. That was last week. It's been nuts. It's been crazy. Lots of news. And because of the jobless claims, we got to have the numbers. If there's a lot of jobs, that means that's good, right? No, that means that's bad because the people have the income to deal with the high prices of inflation, and inflation is just going to keep going. Oh, okay. So we need people with less jobs. Yes. Oh, okay. So less jobs, so the economy looks bad, so that the demand for things goes down, and then the price goes down, and then inflation goes down, right? Yes. Okay. That doesn't make sense at all, So that's why I don't like trading the news. I only trade the price, what's actually happening on the screen. The title for today's episode is "Who is responsible for your trades?" Who is responsible for your trades? We're going to get to that. Today, February 16th, SPY opened up, gap down on the 60s. But it gapped down on the 60-minute chart, the entire market opened up at 408.76. Okay? Now, again, we're keeping it to numbers, okay? Because we're driving, we don't have time. We're taking care of the kids, we're taking care of the house. We don't have time to think about pennies, okay? So the market opens up at 408, okay? Is that good? The market opens up at 408 and starts trading up, okay? And because the sellers got what they wanted, buyers, here comes the buyers. Here comes the people that like to buy the dip, all right? And so that automatically caused us to open up lower than yesterday and yesterday's range. So we had a 2-1-2 reversal to the downside already in force on the day. Okay, in force. Okay, so February 16th opened up lower than yesterday's range, okay, which was an inside bar. So again, the dip buyers came in, the buyers said, all right, we got this. And, with the strat, what we do is when we do see a gap down, we're looking for the 2-2 reversal back up on the 60. Okay. If you did not know that, that's what we do and I'm talking about the 60-minute chart. Okay. And price trades all the way back up to 410 in the first hour. Second hour opens, starts trading above 410 and then proceeds all the way up to 412. Okay. Now that first hour, okay, low, again, opened up at 408, closed at 410, okay? Then the next hour, the second hour, starts at 10:30, opened up at 410, and then traded higher, all right? That's a reversal. That's what we're going to get you in on, okay? That's what we want to get you in on. And now that day was red, so we're not talking about time frame continuity just yet. I know you stratters out there are like, come on now, that was a red day. Why would we do that? I know. Again, just trying to give the people, the new people here that's never seen the strat before or don't know what we're talking about, a little visual in their mind of what's going on here, okay? Again, the first hour traded really low, okay? Started at 408, ended at 410. Next hour opened up at 410. started trading higher. That means buyers are here. All right, buyers are in there, and some people were pretty fast. Some people got in there. What I would have did, and what I did do is look for anything taken out yesterday's highs. Okay, that was Apple. Apple triggered the 2-1-2 continuation up on the week. Okay, what does that mean? What does that mean? What does that mean? That means Apple opened up this week at 151.17. Okay, Apple opened up this week at 151, and then when it got above 155, which was last week's highs, all right, that was your entry to get in. All right, now there wasn't a lot of magnitude there. The magnitude to take out was 157. Okay, so 155 to 157. Some people say not a lot to scream at. If you trade options, that's it. That's it right there. That looks good. But what I did was I started a small position on Apple on the week, 2-1-2 continuation up. That means the price in the weeks are continuing to trend up. Why did I do that? Because of the month. 2-2 reversal up on the month. This month of February is trading higher than January's highs. Okay, January's highs was 147. We are currently at 153. We had a lot of people out there. Once the price, and if you look at go to your Apple charts. Again, if you don't subscribe to any charting software, don't worry about it. Go to Yahoo Finance. Go to Yahoo Finance and type in AAPL. AAPL is the ticker name, and with AAPL, you will see that very first bar, just like SPY. Okay. Now this opened up at 153. Talking about Apple, February 16th opened up the very first hour at 153 and traded up. All right, buyers are in here. It ended at 154. The next hour opens at 154. Starts trading up. Once it got above 154, once it got above 154, which was the high of the first hour, boom, get in. Get in. That's what you want to get in on. That's the reverse you want to get in on. And you had the day was green. Yeah, the 60 was green. The day was green. The week was green. The month is green. We call that full time frame continuity. Okay, full time frame continuity. Love it. That's the kind of trades I want to be in. That's the stuff. All right. Now I got a couple haters out there, couple naysayers. One guy even told me, and he knows who he is too. One guy told me, well, this aged well. Honestly, if this was it, and the reason why he's saying that is because the market started reversing, puking hard to the downside. If you look at the 60-minute charts on Apple, you will see two red bars on the very last 2 hours of the day. And I'm texting my buddy. I'm like, "What is happening? Is there news? Because I'm at work. I don't have time. Number one, I don't trade the news anyway. And I'm like, what is happening? Why is the market dropping so hard? You know what I mean? Other than just a 2-2 reversal down on the 60, the buyers got what they wanted, so they started taking profits, and there's actual selling now. I was waiting for of course I knew that. But I'm like, there's got to be news because this is everything. Simultaneous break to the downside. Something's happening here. So he didn't know what was going on. Like, hold on. Later on, I found out it was more news, like around 2:30, about inflation. About inflation. Another inflation report. Okay, inflation's not going in the direction that they want. It's not going lower. They keep talking about these raising 50 basis points. And if anybody doesn't know how much 50 basis points is, it's about 2%. Okay, it's about 2%. And these basis points are so small, But anyway, I knew that was news. Because that's a pretty dramatic drop for all markets to basically reverse to the downside and triangle out everybody who got long today. All right. What I mean by triangle out is we had corrective activity on the 60-minute chart that completely took out everybody, almost everybody today. Almost everybody. It didn't, for Apple, it didn't trigger a downside on the day. It didn't re-trigger an outside day to the downside. It did not. The day is still green, but now we have a shooter on the day. Shooter on the day. That's our actionable signal for today. Is for tomorrow is a shooter. All right. If the price trades below 153, then our first target's 152. We're going to take that out quick. Okay. And the next target is 150. All right. If we take that out, woo. All right. What's that going to do? That's going to take us below. That's going to take us outside weak to the downside. All right. Nope. Not for Apple. Nope. Not for Apple. The price is going to have to trade below 149 for that to be an outside weak, which is an engulfing bar for people that know technical analysis. Okay. On the week. So who's responsible for my trades? All right. So I got in on Apple. I personally got in on Apple. And again, this guy says, oh, that aged well. Okay. Didn't hit my stops. This thing did not hit my stops yet. And I'm trading common shares. So, but even then, I tell you guys all the time, push your stops up toward the price. Push your stops toward the price, okay? Push your stops toward the price. What's that going to do? If the price does start reversing to the downside, all right, you have an out. You have an out. With every trade we get in on, we want an out. Why? I want to know where I can take profit. And if this trade goes against me, what am I going to do? I have to have an out. Okay, so when I get in, I'm planning an entry and I'm planning an exit. Okay, let's go back to the military. I always talk about the military analogies because that's what I know. So that's what works for me. All right, I'm not going into the fight if I don't have a way out. Okay, I'm not going in to clear a building if we don't know how we're going to get out. Okay, one more. For all you people that play Call of Duty, all right? You play DMZ on Call of Duty. You do not go in there to take out the bad guys and do the missions. If you don't exfil, none of it matters. There you go. That's one for my video game people. If you don't exfil, none of it matters. No points for you. All right? Nothing. All right? So what I'm saying is, with every trade you take, you have to have an out. That's it. When I get in, here's my entry. I'm going to keep pushing my stops. Either I'm going to use the PSAR or I'm going to use a trend line to identify the trend. And once the price straight breaks that trend, I'm going to get out. What's another way? If there's a 2-2 reversal down on the 60-minute chart or the daily chart or the 60-minute, or the weekly chart, that's going to trigger me to get out. You know what I mean? And then a positive. Of course, we're always talking about positives. I got a 2-2 reversal up on the month. All right. The magnitude on that thing is the second target. It already hit it. But the second target is 155. Let's just say it hits 155. Start pushing my stops up. Okay. If anything goes nuts, I have an out. Push my stops. I mean, it hits my stops. The price keeps trading down. Boom, hits my stops. I get stopped out with profit. Okay, I get stopped out with profit. You have to have a systematic way of taking profits. That's definitely true. Okay, but so who's responsible for my trades? All right. Everybody likes to blame the market when things go bad. It's the algos. It's the algorithms. They're screwing me over. It's the market makers. The market makers knew what my entry was, and they screwed me over. They're stop hunting me. Okay, I said that in the last episode. But that's normal. That's easy. But let's just take that same. If we're going to give the market if we're going to give the market responsibility for our trades, and we're going to say they're responsible for our losers, then we have to give them responsibility for our winners, right? So here we go. Let's do the same thing. But we give the market responsibility for our wins. Okay, I got in on Apple 212 reversal up. Okay, it traded above 154. It traded above 154 and traded all the way to 156. Oh my goodness. 1, 2, 3, 4, 5 hours in a row. Nothing but buying. Oh my goodness, this is great. You know why this is great? Because the market knew where I was getting in at, so they kept adding more buyers for me to get in there. They put news out there that said, Apple's coming out with more products. Apple, this is a real thing. Apple's putting out new buy now pay later, a buy now pay later type of program. All right, that's news. They put that out there for me. Let's look at seasonality. Okay, I got TrendSpider. Here's my seasonality charts. It says February's good. It's been great seasonality for February. This is the market helping me out. Doesn't that sound weird? That sounds totally weird. All right. Nobody does that. I think that's a super crazy, awesome, positive point of view, though. If you looked at your buddies and told them all that stuff, they'd be like, I mean, he's not wrong, but I don't think they care about you. Or let's do the opposite, okay? Okay, the market knew. Keep going. I want to keep going with this one. This is so funny. They knew I needed to take profits, so what they did was they added in sellers. And because they know I like to, I'll take my profits. So, here it comes. Here's my 2-2 reversal. Actually, outside 60 on the last bar, where they traded above the last hour, and then they traded below the last hour. Okay, took out both sides, and they knew I was going to cut my longs. So I took it. I cut my longs, and then I bought puts, and then the market started saying more bad news about inflation, and my puts went through the roof. Boy, it was awesome. I made all kind of money. Man, no, that does not sound right? It sounds weird. Anyway, it's a funny exercise. So I guess what I'm saying is, if you're going to give the market, if you're going to blame the market for your, if you're going to give the market responsibility for losses, you have to give them responsibility for your wins. But it sounds icky. It sounds weird. It sounds stupid. The market doesn't give a crap about where you're getting in at or where you're getting out at. Okay. Other people like to say, and this is true though, the market doesn't give a crap about what you think. And that's true. The market does not care what you think. I would say a deeper and more a more accurate way of saying that is the market doesn't think at all. Okay, when you pull up your charts, we are using these charts to identify trends so that we can profit off of them. We are using these charts to identify a trend that we can get in on, a reversal we can get in on, to take and then push our stops up until we get stopped out profit. Okay, that's what we do as straters, right? Create winning positions, add to them, and get it, and defend them when tight stops, right? That's what we do. And the only thing the market is doing, the only thing the market is supposed to be doing, is showing you the price right now. That's it. I did a really good interview with Raymond. Palansax is his Twitter name, okay? But Raymond had a really, really good way of talking about price. This is amazing. He said, the only price that is true is the price that it's trading at right now. That's it. The only price that is true is the price that is trading right now. I was like, wow, that's amazing to think about that, because we look at all these bars. We look at all the line charts. We look at indicators. We look at time frame continuity and Browning formations and reversals. And we say, well, if there's no reversal against me and it trades above here, here's the magnitude. It's going there. And we say that with confidence, right? But what are we really looking at? We're looking at past data, right? Yes. We're looking at historical data to identify a trend that we believe strongly, if this hammer goes in force, it's going to go to the upside, and it's going to hit the magnitude at, let's just say it goes in force at $20, and the magnitude's 27. Here's this is what I'm going to make once it hits there. You know what I mean? I'm going to keep, but here's my plan to get out. Here's my plan. Either I'm waiting for another 2-2 continuation up because I'm a swing trader and I'm just going to hold it. I'm going to put my stops even and I'm just going to hold it. Or, no, I'm a day trader. I don't have time for this. You know what I mean? This stock trades. This stock makes. What do they make? They make socks for cats. Oh man, Etsy. That's what it is. Etsy. They make socks for cats. You know what I mean? They make coffee mugs. Who cares? Hammer and Force. You know what I mean? From $20 to $27. Boom. It's liquid enough for me to buy shares, buy options. Boom. It hits the magnitude. I'm out. You know what I mean? That's the thing. That's how you could trade it. You have to execute it, right? You have to be able to execute. We talked about that last episode. Again, we're looking at these bars, and it's all past data. It's all past. It's gone. It's past data. Historical data. So the only price that is really true, that is actually true, is the price that's trading right now. Okay. All right. You have to take So you have to take responsibility for your trades is what I was going to lead into. But to finish my statement is the only thing that these charts, the only thing the market is responsible for is showing you what the price is trading at right now. That's it. That is it. The market is only responsible for showing you where the price is trading at right now. And daggone it, I hope you bought real-time data or it's delayed. Then it's not doing its job at all. Daggone, man. You're supposed to tell me where it's at right now. This is an amazing time right now where they're letting you see all this information because, can you imagine trading in the 90s and in the late 80s looking at the newspaper? You know what I mean? You can only look at closing prices. You got to make your decision based on closing prices that's printed in the newspaper. Oh man, I don't know. There's some straters out there right now saying I could do it. I don't care. I could do it. I could, and you probably could. So let's get back to the point. Let's hone it. Let's bring it back. You have to take responsibility for your trades. Okay. Taking responsibility for your trades means defining your risk, but before you enter your trade, defining how much you're willing to risk before you take a trade. If this trade goes against me, how much am I losing? The next step is, the next step of that question is, if I take 5 trades this week, and this is my projected losses, if I take 5 trades this week and they all 5 of them go bad, all 5 of them, which is unlikely, right? Right. But all 5 of them, 5 trades, terrible week for you. Is if you add all those losses up, potential losses up, how big is that? You have to be able to answer that. Okay, that comes with trading plan. Okay, trading plan. So with options traders, that's a lot harder. With people that trade common shares, we can use those tighter stops. All right. But you still have to be able to, in the small account people, you still have to be able to look at this and go, all right, if here I go. Can I, I'm an options trader. Can I afford to take 50% losses on 5 trades this week? No. So why am I saying I'm going to take 50% a loss on this trade before I get out? That's crazy, right? If you're driving to work and you find you got a full tank of gas and you're driving down the highway and you're like, oh crap, I missed my exit. Do you just keep, you know what? I'm going to stay on this road. I got a full tank of gas. I'm going to stay on this road until this road starts taking me in the right direction. And I'm not turning around until I get to a half tank of gas. I'm not doing it. I'm not turning around until I get to a half tank of gas. You're not going to make me do it. Everybody in the car would be screaming at you. We're going to be late. Even if you didn't have to go nowhere, they'd be screaming at you. That is the dumbest plan I've ever heard. I'm gonna drive until it's halfway down before I turn around and get off on this exit and go back the other way. You better get off on this exit 12. Take this little loop-de-loop and get back on the right track. You're going south, you're supposed to be going north. You better be going north. All right? So, that's a funny, analogy, but it's true. Okay? So you can't, so if you add up, you take responsibility for your trades. You know how much you're willing to risk, and you accept that risk. Putting on the trade is not accepting the risk. Okay? Putting on the trade and going, okay, I got stopped out. It hit my stop. I'm out. And it doesn't affect you, it doesn't bother you. That's accepting the risk, okay? And I'm not talking about being emotionally stone cold. I'm saying, all right, I hit my stop, small loss. All right, cool. I got my money back. Now it's time to find a trade that's actually working, or reverse. You know what I mean? Apple did great on these 60s for 5 hours. It's about to triangle lay out all these bars. I take my profit, and then I get a put, get some puts and work it to the downside on the 60s. I'm cool with that. You know what I mean? So take responsibility for your trades. That goes along with, again, identifying your risk, and then the next step is having a systematic way of taking profit. Okay, having a systematic way of taking profit. That comes from Trading in the Zone from Mark Douglas. Okay, you will not go broke taking profits. You will not go broke taking profits. If you're an options trader and let's just say your goal's like, 30%. That's it, 30%. It hits magnitude. It hits that 30%. Boom, take it. Just take it. You know what I mean? Or and then if you're good enough, you got two options. You got one. Boom, you take your money. Boom, take your money on the first one. That's that 30%. You paid yourself. You paid yourself first, okay? And then you left the second one on as a runner, okay? Second, got the second base. You know what I mean? And you don't leave that thing as a runner, and hopefully it makes it all the way back home run. You know what I mean? Hopefully it keeps going, hits the second, third target, fourth target. But if it doesn't, keep pushing them stops up. So you left a runner. You left a runner on your option, or you left a runner on your, you cut half of your position, you have half of your position left, okay? For the podcast, we're going to say 10 shares. You had 10 shares, took off 5, paid yourself. You have 5 left. What's your exit for these 5? What's your out? Where are you going to get out at? You're going to let that one trade all the way back down and go to 0? But you put your stops even. You can. But you better put your stops even. I'd rather you have an out and go, okay, I'm going to leave this runner on. And if, the next, here's my, let's just say 2-2 reversal back down on the 15. Nope. Cut it. Take my profits. Take them. Have a systematic way for taking profits. Okay, that's what I'm saying. Take responsibility for your trades, and journal. I was not really into journaling until I met OG Trades, and just making a note of where you got in at. It doesn't have to be elaborate. It could just be a screenshot. It could be some quick notes. You know what I mean? And again, all right, took a small loss today. That's good. Smiley face. All right. Small loss. Or win. Here we go. I mean, I took 5 trades. These are winners. Then you can flip back in your pages and go, okay, look at this. Look at these few weeks. These are good. You know what I mean? These are good. I'm making good wins, good profit. I'm taking my profit when I get it, and I have small losses. And the losses that I am taking are not wiping out my profits, because it's not about what you make. It's about what you can keep. All right, that's enough for me. This is the Strat Soldier for Enforce. That's enough for me. It is. This is supposed to be short, little podcast just to get everybody's mind, in the right, state of mind. It's all about state of mind. You're gonna be surprised what you could do with mindset. It's almost more important than skill, but that's for another time. This is the Strat Soldier for Enforce. I'll talk to you guys later. Peace.